global reserves just hit the lowest level since 1992. And somehow nobody's freaking out about it. There's no breaking news, no sweaty guy on CNBC, and no market panic. It's just been silence, which is weird. But there's also a reason why. And that's because it's been happening slowly and in the background. Because while everyone's busy arguing about whether AI is coming for their job or whether Elon Musk is even human, the global financial system has been quietly rewiring itself. And most people have no idea what's happening. But before we can jump into why this matters, you first need to understand why being the global reserve currency is the United States' secret weapon. Because while on the surface reserve currency status might sound boring, like it's something that really matters to Wall Street bankers who snack on nicotine pouches and live in $4,000 Soho apartments, in reality, it's actually the invisible engine behind the United States economy. And that's because being the reserve currency is like being the backbone for the global financial system. So it means that every other country needs your currency to do business. Basically, if countries want to buy oil, settle trade, or pay international debts, they likely need dollars to do so. So countries are forced to buy U.S. bonds and hold dollars in their reserve, which means America has access to the cheapest capital on Earth. And it's estimated the U.S. saves more than $200 billion annually just from this arrangement. It's the greatest financial cheat code in human history. Nobody voted for it. Nobody signed anything. It just fell into place after World War II. When most of Europe and Asia was rebuilding from scratch, the U.S. was one of the last major economies still standing. And so the dollar became the default for global finance. But 70+ years later, and most people still assume this is a permanent thing, like gravity or taxes, or Marvel making another Spider-Man movie. But it's not. And for the first time since World War II, the alternative options are finally emerging, and the data tells the same story. Because in 2000, the dollar made up 71% of global reserves. It was the clear favorite, no contest. But by 2010, it had slipped to 66%. Still dominant, but something was moving. And today, it's below 58%. And here's where it gets interesting. Because every major crisis has pushed the trend along a bit more. Because after 2008, there was a short-term flight to safety to the US dollar. But the long-term effects were very different. Because following the financial crisis and the Fed's quantitative easing programs, central banks began asking a question they hadn't really asked before. Are we too concentrated in dollar-denominated assets? And then in 2014, the US imposed sanctions on Russia. Now countries were asking another question. What happens if Washington decides we can't use dollars either? And this kicked off the Russia-China partnership, because for the first time there was a serious push toward building alternatives to the dollar, and, more importantly, to the entire US financial infrastructure. It's where systems like CAIS start to emerge, systems built from the ground up with one goal: round U.S. dependence. And then came 2022. The U.S. and its allies did something that rewrote the unwritten rules of global finance. They froze roughly $300 billion in Russian sovereign assets and cut Russia off from SWIFT, which is essentially the WhatsApp for global banking. It's the messaging network that runs basically all international banking. And whether that was the right call or not is a video for another day. The point is that it sent a signal to every central bank on Earth that the financial system they depend on can be switched off at any moment if they go against Washington. And now central banks were starting to look at their dollar holdings and thinking, maybe we need some backup plans, because for decades, if you were a central bank trying to settle a trade between, say, Brazil and China, two countries with no connection to the United States, you had one option: route it through New York, through dollar correspondent banking, through U.S. regulated infrastructure. So every trade, every payment, and every settlement touched the American financial system. And not because anyone preferred it, just because there was nothing else. There were no other liquid markets for these transactions. So both central banks would hold accounts at a correspondent bank in New York, like JP Morgan or Citi, and they would facilitate the transaction. And this arrangement effectively turned the U.S. financial system into the foundation of the entire global financial system. And with this came massive unfair advantages economists call exorbitant privilege, which can be broken down into three pillars. First, intelligence, because when a trade between Brazil and China clears through New York, it doesn't just move money, it moves data. And it gives the US visibility into seeing who's buying and who's shipping what. It basically gives the United States a bird's eye view over global trade. And the second pillar, alt investment, because every country needs dollars to trade. And countries can't just store cash under a mattress. Treasury bonds had constant demand, which forced the world to buy our debt and let the US borrow money at significantly lower interest than other nations. And finally, jurisdiction, because trades ran through New York. It enabled the United States to act as the supreme regulator, like we saw in 2022 when the US froze $300 billion in Russian assets. So this whole system the United States built wasn't about empowering global trade. It was about power. It was about building infrastructure that allowed for global control. And other countries finally had enough, but you can't replace these things overnight. It takes a coordinated multi-country effort. But before we dive into who's coordinating this attack on the United States, let's talk about the platform that figured out how to replace 10 AI subscriptions with just one bot. Because this video is sponsored by GenSpark. GenSpark is an all-in-one AI workspace that recently launched their AI Workspace 4.0. Scaled to $250 million ARR in 12 months, and just ran a Super Bowl ad. So why is everyone switching to GenSpark? Well, I can show you better than I can tell you. There's an upcoming FOMC meeting on April 29th, and everyone's watching whether the Fed holds or hikes rates. But the rate decision isn't the real story. The second-order effects on credit markets, housing, and the dollar are. So you open the new GenSpark Claw tool and tell it to research the effects of a Fed rate hike across asset classes. Then GenSpark Claw gets to work inside the new GenSpark Cloud computer, which acts as your own personal work environment, where it simultaneously pulls Fed transcripts, IMF data, and research across dozens of sources while you can step away from your desk entirely. And what comes back is a full structured breakdown. Then you can drop that into GenSpark's AI docs and instantly produce a professional research report with a clean layout and formatted sections. And if you want this briefing before every future Fed meeting, GenSpark's new advanced workflows feature lets you schedule this whole thing as an automated process that runs every time a Fed meeting rolls around. And with the new GenSpark 4.0 workspace, you can also access the GenSpark Claw tool directly on your desktop. If you want to try out GenSpark, you'll get free credits when you sign up through the link below or in the pinned comment. Thank you to GenSpark for sponsoring this video. And now back to the changing world order. Because this isn't just about markets, it's about coordination at a much higher level. And it starts with politics, because before you can build an entire new financial infrastructure, you need countries that actually want to cooperate on it, and that's BRICS. BRICS is a group of emerging market economies that have come together to cooperate on economic, political, and financial issues. The idea is simple. Individually, these countries can't easily challenge the dominance of the United States or the Western-led financial system. But together they can. They are countries not just doing business together, but they are countries actively creating infrastructure to operate outside of the old rules. But while most people still think of BRICS as just Brazil, Russia, India, China, and South Africa, it's now become so much more. Because BRICS expanded in 2024 to now include Saudi Arabia, the United Arab Emirates, Iran, Egypt, and a few others. And now BRICS collectively represents more than a quarter of the global economy and nearly half of the world's population. It's a group of over 11 member countries that share infrastructure, route trade deals, and are actively building an alternative to the United States financial system. Which brings us to the single most underreported financial story of 2026, the unit. Now, if you've never heard of the unit, you're not alone. Most people haven't. And that's because traditional financial media only covers what gets clicks, things like Nvidia's earnings, Trump's latest tweets, and Palantir's newest product launch. But this is the stuff that actually matters. Because the unit is a blockchain-based settlement tool designed for the BRICS countries. It lets member countries bypass the US dollar by using a neutral unit of account instead, one that is backed 40% by physical gold and 60% by a mix of BRICS currencies. And I know that may have been confusing. But in plain English, it just means it's designed to replace the role of the US dollar, and in January 2026, it moved from concept to operational pilot. And right now, it's trying to do one specific thing: give the world a neutral measuring stick for pricing commodities, which is very important because one of the dollar's deepest, least visible forms of power isn't just that commodities like oil get paid for in dollars, it's they get priced in dollars as well. The dollar is the reference point, and as long as every commodity on Earth is quoted in it, the dollar is baked into every global price, and the unit is a direct attack on this system. It's intended to break the US dollar's monopoly on price discovery, but the unit itself won't replace the dollar. There has to be infrastructure behind it, and that's what mBridge is. It's another thing you've probably never heard traditional financial media cover. It's a blockchain-based cross-border payment platform that went live in 2024, and it's the pipe that is intended to let countries trade directly with each other, meaning no correspondent banks, no JP Morgan, no Citi, and no New York watching over the global transactions. Which brings us to the main point of this video. For the first time since World War II, we are seeing real alternatives to the US financial system begin to appear, which means the entire basis of the dollar's dominance, the correspondent banking system, the data advantages, and the regulatory choke points, it all disappears if we see transactions start to be settled through these new systems, meaning the multi-decade-long systematic advantage the United States had disappears. And on top of all of this, we're seeing other signals as well, other signals of countries shifting away from the dollar, because since 2022, central banks have been buying gold at the fastest pace in modern history. In early 2023, Brazil and China signed an agreement to settle bilateral trade in renminbi and reals. In late 2023, India completed its first ever purchase of UAE crude oil using Indian rupees instead of the US dollar. And for the last 50 years, Saudi Arabia and the United States have operated under the petrodollar system, where oil is priced and traded in USD. But now Saudi Arabia has considered openly discussing accepting Chinese yuan for its oil sales. Quick side note, the petrodollar thing is a rabbit hole, and if you want me to make a video on it, just leave a comment. Anyways, the point is, none of these things individually can replace the dollar. Not BRICS, not bridge, not bilateral trade deals, and not gold buying either. But that's not what's happening. And that's not the point. What's happening is something a lot harder to spot and a lot harder to pinpoint. It's optionality, and it's optionality that kills monopolies. Because the truth about the dollar's dominance that nobody really talks about is, nobody chose the dollar because they loved it. They chose it because there were no other options, and for the first time in over 80 years, other options are starting to exist.